I would like to invite Greg Saunders to the microphone. He is the CFO of Codding Energy Fund. I will let Greg introduce himself and tell us a little bit about the company, and then we'll get into it.
Thanks very much, Nick. Good morning, everyone. I'm Greg Saunders, the CFO for Codding Energy Fund. Codding is the leading PACE originator in the U.S., having originated over $2.4 billion of fundings across 98,000 projects. Included in that is $200 million in commercial property financing. The company serves multiple purposes, but one of the biggest purposes that we serve is helping communities across the United States mitigate the ongoing challenges of climate change, as well as to adapt to some of the problems that are already very evident from climate change. To that end, the company itself has been tallying with outside experts some of the environmental impact we've been able to have. And before I talk about specifics in this kind of financing and why it matters for greening the built environment, I just wanted to highlight that a big part of this business is having an impact. To that end, the company has helped to abate 2.2 million metric tons in CO2 emissions, saved 7.3 billion kilowatt hours of energy, created lots of economic growth in communities, and saved billions of gallons rather in water. Not to mention all of the savings related to disasters from things like hurricanes, where we've been able to help save $1.9 billion in hazard insurance losses through the kinds of improvements that homeowners and business owners are making because of PACE financing. So what I'd like to cover today in the brief 10 minutes that I have, at least before Q&A, is 4 things. First of all, just a quick overview on PACE financing, what it is, for those of you that aren't as familiar. Secondly is the context for PACE. Why does it matter in terms of helping to reduce greenhouse gas emissions and helping to create a greener building environment? Number 3 is how investors can participate in the PACE business, in the PACE asset class. And finally, what kinds of issues do investors typically come across when they evaluate PACE investment opportunities, and what are they paying attention to as they evaluate those opportunities? Okay, to start on PACE, many of you know that PACE stands for Property Assessed Clean Energy, and that it was a interesting public-private framework that came to mind in Berkeley in 2007, 2008, when the Berkeley mayor was asking a simple question: how can we get solar on the rooftop of every building in this city? That got the creative juices flowing for the mayor's advisors, including advisors that had a lot of knowledge on municipal finance and the public, way to finance things that are good for society. And the key breakthrough was the realization that, reducing CO2 emissions in the built environment and saving water, that's in the public interest, just like schools and roadways and sewer districts and so forth. Well, why can't we use the property tax roll, the billing and collection of property taxes, to help finance these improvements? In that way, we could spread credit broadly across communities. We could enable property owners to tap into the equity of their home and essentially provide a secured interest in the financing vis-a-vis a property tax lien. So that was really kind of the key breakthrough that got PACE going, and that has resulted in what is now a very powerful public-private legal framework in the United States. It's been adopted by 36 different states, of whom 24 have active programs, 4 of those for residential, and all 24 active programs covering commercial properties. The industry over the last 10 years has generated quite a bit of volume, $9.4 billion in closed transactions. 2.1 billion of that is for commercial properties and 7.3 billion is for residential. And it's had a fairly tremendous environmental and economic impact. The earlier numbers that I cited were really just for Y-Green. So if you gross up those numbers by about 25%, which is Y-Green's share historically or inception to date of the market, you'd see numbers like 7.4 million metric tons of CO2 abated thanks to PACE, and $15.8 billion dollars of economic activity created. So PACE has really become quite a mechanism to help property owners make a difference for their bottom line as well as for their communities on a number of fronts. So now let's talk a little bit about the context for PACE and why, how does it fit into the greening of the built environment? What place does it fill? The first thing to know is that it addresses a pretty huge problem. When you look at the combined contribution of greenhouse gas emissions between commercial, residential, and industrial properties, you're talking over 60% of emissions from an end use perspective in the United States. And so it is a big opportunity, is a big problem at the same time. And property owners who want to pursue a greener building obviously are going to look at not just how they can reduce their emissions or their footprint, but also how can they impact their bottom line. And for that, they will look to various alternatives to finance those improvements. They might have cash on hand. They might tap into mortgage financing. You'll hear a little bit about that today. Unsecured financing, of course, just regular bank financing. There's project financing, such as a solar loan you might be able to qualify for. There's things like energy savings agreements. All of these have different, advantages and disadvantages. And where PACE fits in is that compared to most all of those alternatives, it is much more liberal in terms of the application of credit. So it allows property owners who otherwise might not be able to get a bank loan to get that kind of credit to make important upgrades to their properties. We're talking energy efficient windows, new HVAC systems, insulation, solar energy, all kinds of these important improvements. So the reason that PACE is able to spread credit more widely is because it is secured by a property tax lien on title of the property that is senior to private indebtedness like mortgages. So it provides a real secure investment for those who are providing capital into the space. Now, that's not without some controversy if you talk to a mortgage banker who doesn't really like the fact that PACE could be on title and is senior to the mortgage. There are some limitations that PACE has to deal with, whether it's commercial or residential property. So I want to acknowledge those because PACE financing is not appropriate for every property owner necessarily. On the commercial property front, it is a financing that's not available in all states yet, so it has limited exposure, if you will. And with that, there's limited awareness among many commercial property owners that this kind of financing exists. Oftentimes, these property owners could get up to 20% of the value of their properties to make these kinds of energy efficiency upgrades. And slowly but surely, more and more of them are getting to learn about PACE. And then an obstacle often is that mortgage lenders have sort of stepped in to assert themselves, and it's resulted in the need to get a lender consent to put a lien on a commercial property, and that has slowed down the expansion of the business, but it's slowly starting to improve, I think, in terms of the success rate in getting lenders on board. And then another limitation, just going over to the residential sector, is that we only have 3 states that are active right now, and Ohio's coming on board in 2021. But the reason it's been so limited for the residential sector is because of opposition from the FHFA and other groups who have tried to slow the growth of residential PACE. It also has a history of some bad PR relative to the some bad acts and bad actors in the contracting industry, and really some lack of, I would say, proper procedures and controls that used to exist in the business that have been significantly, if not completely, resolved at this point. So the possibility for PACE, aside from these challenges, however, is that it really can help to continue to transform the adoption of green and clean technologies in the built environment, because it provides property owners with the ability to afford these kinds of improvements better than many other kinds of financing. It is something that really holds a lot of promise, I think. And so a key question for investors is, well, this sounds kind of great. How do I get exposure into the PACE business? Well, you can go into the debt markets or the equity markets here. On the debt side, we could be talking about the primary debt market, where you are helping to originate assets directly by putting out capital as an originator to property owners or through third-party channel partners. You could also be providing wholesale financing vis-a-vis a senior warehouse line of credit, for example, or a subordinated form of financing, a haircut equity, if you will, to support PACE asset originations. And then, of course, in the secondary market, we have a fairly active secondary market where there is new issuance of PACE securities happening on a regular basis, such as the recently closed CleanFund Good Green transaction. Actually, it's closing in about 1 hour from now for about $350 million of securities that are being offered in 3 different tranches. So there's the ability to participate on the secondary side as well. Well, investors who are buying these securities or investing in PACE companies have plenty of things to think about and to be concerned about. So for the commercial property PACE assets, many investors are looking at traditional commercial real estate fundamentals, such as what is the loan to value relative to the PACE financing? Is there geographic concentration in a pool? How many of these assets are ground up construction assets, and what kind of risk is there with new construction? And then on the residential property front, there's a lot of attention on the prepayment speed. So how quickly are these assets prepaying because mortgage rates are coming down, and what kind of risk does that play into some of the notes that are being offered? What are the delinquency rates in residential PACE and the defaults? And then last but not least is, what about the headline risk? I read these things in the paper about some contractor taking advantage of an elderly homeowner. What's going on in this business? And that is another form of concern for investors that we've heard about for sure, and something that has largely been addressed, but obviously not good enough. Otherwise, the press would quiet down. And so far, we don't see that, at least not lately. With that, I think I'd like to conclude my initial discussion and look forward to answering any questions, Nick.
Terrific. Thanks so much, Greg. Excellent overview. I didn't know a whole lot about PACE, so that was a really good place to dive into it. We got about 5-6 minutes or so we'll try to crank through the questions real quickly. If you do have additional questions, please do just type them right into that Q&A box on your screen. First question is coming from Stephen Hall. He is a consultant for owners and developers of real estate projects. He is asking about the concept of turning the energy systems into a performing asset, not only for the building, but possibly to even export to adjacent buildings or the grid. Comments or thoughts on that goal?
Well, I think that is the kind of goal that we need to be talking more about, where you're not just isolating the excellence of one building and what it can do, but you're helping to monetize its performance relative to how it is helping other buildings and the grid at large to perform more efficiently and to garner, say, renewable energy. For that, PACE financing may, be able to support it, but not necessarily directly. But I'm a believer that if you have a portfolio of highly energy efficient buildings, that the savings generated from those buildings in terms of reduced kWh usage, for example, should be able to be monetized in some form or fashion, utilizing utility-based structures or government-sponsored programs of some kind.
Good. That was actually our only question so far, but I'll throw another one out there just to keep it flowing. So when PACE first developed, there was a company called Renovate America. There was probably the leader in the space, and they went under, they didn't make it. Could you talk a little bit about why that happened and what we've learned from that?
Yeah, Renovate was definitely a pioneer in the business, really getting out of the blocks very quickly in 2010, 2011, 12, and so forth, and aggressively built the business. I think it's a classic example of a company getting a bit too far ahead of its skis in terms of growth with aggressive management and without an eye on the risk factors that could face the business. And for that, unfortunately, Renovate fell victim to a number of home improvement contractors who took advantage of the PACE financing and mischaracterized it to various homeowners and came away with some fraudulent activity that resulted in a lot of litigation. The company faced a lot of challenges from that litigation, and then ultimately, California instituted regulations that caused PACE financing to be less advantageous, or shall I say, not as easy for home energy contractors to utilize in their discussion with homeowners versus unsecured forms of financing. And the result of that was that the business in California was taken nearly in half. And for that, Renovate was not able to survive such a reduction in the size of their market. And unfortunately, their business just couldn't handle the ongoing litigation costs. So they've exited.
Well, in the interest of time, I think we could probably do our 20-minute check right there and roll in with the next speaker. Thank you so much, Greg, for taking the time.